Okay, fam. It is time to talk about Soun yet again. Their year-over-year growth is impressive, especially with their EPS. They have also received a new upgrade to a $10 price target. And not only that, Soun is garnering a lot of attention from different analysts all over the country. I want to talk to you guys about two specific things that have happened recently in Soun, and then I want to show you why I believe Soun is going to have a pretty substantial run in the next couple of months, especially considering PMI data has been good, CPI data has been even better, inflation is dropping, and not only that, we have interest rate cuts on the horizon. And because Palantir is going to be doing so well with the rate cuts and the inclusion in the S&P 500, and Nvidia, AMD, Taiwan Semiconductor, and the other AI players are also doing very well, it leaves a lot of room for sympathy with Soun. And not only that, there's something else that's even critical with Soun. They have another partnership. So I'm going to tell you guys all about this, and then I'm going to show you how you can get into Soun and how to dollar cost average your position so that you make the most out of your investment in Soun. Soun AI is expected to post a loss of 8 cents per share for the current quarter, representing a year-over-year change of 11%. Over the last 30 days, the consensus estimate has changed negative 27.8%. For the current fiscal year, the consensus earnings estimate of negative 36 cents points to a change of 5% in the positive from the prior year, 5% or 5.3% year-over-year growth. Over the last 30 days, this estimate has changed negative 19.2%. For the next fiscal year, the consensus earnings estimate of negative 21 cents indicates a change of plus 41.7% from what Soun AI is expected to report a year ago. That's pretty substantial growth. Over the past month, the estimate has changed plus 13.7%. For Soun AI, the consensus sales estimate for the current quarter is 23.68 million, indicating a year-over-year change of plus 78.5%. This is almost double from last year. For the current and next fiscal years, 82.59 million and 151.87 million estimates indicate a 80% and an 83.9% change respectively. Soun reported revenues of 13.46 million in the last reported quarter, representing a year-over-year change growth of 53.8%. EPS, a negative 11 cents for the same period, compares with a negative 10 cents a year ago. Compared to the consensus estimate of 13.01 million, the reported revenues represent a surprise of 3.47%. The EPS surprise was negative 22.22%. Soun said Wednesday that Musk Health has deployed Emily, an artificial intelligence agent powered by Amelia Patient Engagement, to optimize its patient appointment management. Musk Health is a Southern California-based academic health system. Financial terms weren't disclosed. With the deployment, patients can communicate with Emily to manage their appointments and get answers to non-clinical questions, the voice AI company added. Soun acquired AI software firm Amelia earlier this month for $80 million in cash and equity. Soun shares have jumped 136% year to date, well, 135.9%, outperforming the technology sector's gain of 21.3% and the IT service industry's return of 3%. It outperformed industry peers like ServiceNow, Infosystems, Vertiv over the same time frame. And these shares have gained 17%, 22%, and 62% respectively. Soun AI shares have been benefiting from a strong portfolio, a solid partner base, and expanding clientele. Soun offers conventional intelligence through independent voice AI solutions in 25 languages in both cloud-enabled and hardware-embedded services. Soun offers conventional intelligence through independent voice AI solutions in 25 languages in both cloud-enabled and hardware-embedded devices. Its prospects benefit from a massive addressable market worth more than $140 billion that includes diverse industries like automotive, restaurants, consumer services, entertainment, smart TVs, and Internet of Things powered devices. However, Soun's impressive second quarter 2024 results bring this question into investors' minds. Is it too late to jump into Soun's AI bull run? It can be tricky trying to understand the stock market, especially something like this. Understanding the value of a company, understanding their price to sales, their price to earnings, their revenue, their cash flow, trying to figure out which companies will have potential in the future that you should invest into. Then there's also puts, calls, fundamentals, how to actually actually execute trades and invest properly, dollar cost averaging. If these things sound confusing to you and you're looking to grow your financial health and freedom, I would love to help you guys. I offer a full training course, Discord, and one-on-one coaching. So this way I can show you how to become a better investor and a better trader and help you grow your financial freedom that you ultimately deserve. Spots are limited. I can't take everyone as it's a very serious mentorship. So if you are dedicated to growing your financial freedom and would like to live your best life, I would love to help you guys. You can sign up at investwithcorey.com right there on the screen. The link will also be in the information box below. My Discord students come in even when they're in the negative, and within their first month and second month, they're in the positive. 10 to 15% return in the first and second months. I also have students that are up 50 or even 100% over 2 to 3 months. If this is something that you guys are interested in and you're watching this video and you really want to get better and you really want to grow, I would love to help you. Don't wait, act now. Very limited spots. I'd love to see you soon. Looking at the technicals and fundamentals right here, we can see that Soun has a few interesting moves happening. Now, we do have an all-time high back in March of $10.50. Now, I want you guys to understand that although this seems like it's a good thing, now I want you guys to understand something. This does seem really good that the price peaked to $10.50. However, this was a little bit of an overreaction because of the NVIDIA investment. In my opinion, right now, a very good price to get Soun is between $3.40 and $5. Doesn't matter, anywhere in that range. In fact, you could even dollar cost average going up and even add as it goes above $5 or even $6. But right now, there's something really interesting that we're going to see here. If we look at this complete picture right here, we'll see this is a downtrend, and then we'll see that there is an uptrend right here, and we're forming sort of a wedge pattern. And this is a little out of sorts because of this dip right here. But ultimately, we could come back here and we can see that there is definitely a wedge pattern forming, and it almost does look like a bull flag. And I'll show you what I'm talking about. So this would be the flag right here, I guess. It's a kind of a rough, it's a really, really rough example, but we could almost see this as being the case. Big up, there's the pull, consolidates, gets really tight, and we're either going to knife or we're going to jump. And because of what's going on with NVIDIA and AMD in the tech sector and rate cuts and things getting better, if Soun's next earnings is good, which is coming up on November 7th, it's only 6-7 weeks away, this is going to be incredibly important. And I think that based on the technicals that I'm looking at, Soun is going to come up. Maybe it'll have a nice little run this week, and next week it'll come back down, something like this. And as we get closer to earnings, it'll maybe do something like this and then run right before earnings or on earnings. It's also possible that we could have a nice run like this. It'll come back down, consolidate, which is more likely. It'll start to sell off a bit before earnings, and then it'll start running like this, and then into earnings it'll run. Now, if we look at what happened previously, there wasn't a whole lot of movement on the last two earnings. But because of rate cuts and the way AI is going, my honest price target for earnings, leading up to earnings that is somewhere around 625 to 650. It might go a little higher. On earnings, it'll jump a bit. And if earnings meets or beats, especially if it beats it, and not only just beat it, but beat it by a good margin and go possibly positive. So we're expecting -7 cents. If we go to positive 2 or 3 cents, then this is likely to come up to around $8, like somewhere in the low 8, mid 8 range, somewhere from here to here. Like, it's very possible we could start working our way up to the top here of 8 to 8.50. Now, there are a few analysts that gave Soun an upgrade to $10. Another one was 11, I believe, and there was one for 10.50. I believe that if Soun can beat the earnings by a decent amount on revenue and EPS, and they deliver a solid earnings, and the rate cuts go well next week, and everything just kind of falls into place leading into November. The elections could affect it negatively as well, so the earnings may not pay off greatly for Soun because of that. But ultimately, if everything else goes well, Soun should have a decent run. So if Soun crushes earnings and it's still affected by the election, even more than I believe it will be, and the price doesn't move much, as we get out of election season into December and into the new year, Soun could start running a lot more. I anticipate either way by the new year, SoundHound being somewhere between $5.50 and $6. It's ultimately tough to say for sure, but that's where I say it's going to be, even if things are rough. If things are better on the bull side of things, I say SoundHound's going to be between $7 and $8. But there's definitely a good amount of upside, but it's going to depend on earnings. Ultimately, though, by this time next year, going into 2026, I have a price target on SoundHound of $10 to $12. So this stock in the next year and a half, in my opinion, is about 150% return. I really believe this is 150 to 200% in the next year and a half to 2 years, which signifies a 2 or 3x return, which is a lot in only a year and a half or 2 years. If you want a dollar cost average, you don't really need to lower your cost. Buy the dip down here. If the stock comes up, add. If it goes up, add. Goes up, add. And when it pulls back, add more. Pulls back, add more. Just keep adding. The amount of shares that you accumulate when the stock runs to $12, $13, $14 or even higher, you're going to have more stake in the game, which means more profits. It's not really going to matter, and I've shown this example in previous videos. If you have 3,000 shares with an average cost of $8, that's going to be better than having 500 shares with an average cost of $5. So it's not as important as how many shares you have. Obviously, you want the lowest cost with the most amount of shares. But if you have to choose between a $5 average at 500 shares or a $7 average at 5,000 shares, obviously the 5,000 shares is going to be paying out a lot more, no matter where the stock goes, as long as it's above $7 because of the amount of shares. You want to make sure that you're dollar cost averaging on the low and the high and the mid everywhere. Try to get it as low as you can. Buy the dips, buy the mids when it's peaking, wait. If it looks like a pullback's coming and it starts to fall, add. If it doesn't fall and it starts to go up even more, quickly start adding a little bit. You want to increase your position in a stock like this, but ultimately you don't want to add more than 10% of your portfolio in this type of a stock. I would say at the absolute most 15%. If you have a $50,000 portfolio, there's no excuse to have more than 5 or 10,000 in SoundHound. I actually know certain people that have $50,000 accounts or 60,000 and they have like 40,000 in SoundHound. That's not a good idea. If SoundHound was to have issues going forward, you could burn most of that and fry your account. It's not a good idea to go much beyond 10 or 15%. At the very ceiling of things, I've seen certain trades that are good or certain companies where you can put 20%, but this is a little risky. I'd like to keep it to 10%. Dollar cost averaging is very powerful, and I teach this to my students all the time. This is very important to learn, and I'm going to show you guys exactly what I'm talking about and why it's so powerful. If you guys are having trouble understanding these technicals and fundamentals and you just don't quite understand dollar cost averaging, if you're a beginner or you just don't understand the market at all, you really just don't get it, I would love to help you. I offer full training, Discord, and one-on-one coaching, very limited spots. It's a very serious mentorship. It has given me the ultimate freedom to be able to live my life the way I want, trading and investing. And I would love to show you how you can retire early and enjoy your financial wealth and your financial freedom that you ultimately want and deserve. You have to be dedicated and you have to want to learn and you have to be able to commit to your education and getting better. Like I said, very limited spots. You guys can sign up investcorey.com right there on the screen. The link is also in the information box below. Every student in my Discord right now, after their first or second month, are up 10, 20, even 30%. And I have many students that are up 50 or even 100%. Some have small portfolios and others have larger portfolios. But I can ultimately show you why my system is the best system to implement in your portfolio. And it is the best education you will get in the market. You will learn more with my course and my one-on-one coaching than you will anywhere else. I challenge you to join and find out for yourself. So let me show you guys why dollar cost averaging is so powerful. Let's say a boring investor buys 100 shares at a time of Palantir and buys 100 shares at 34, 100 shares at 31 when it drops, and then another 100 shares at 30 when it drops, but then it runs back up to 35, so this person stops buying. Well, the individual that is going to dollar cost average up and down buys at 34, buys at 31, buys at 30, buys more at 31, buys more at 32, then more at 34, then does another 100 shares at 36, then another 100 shares at 35, and then another, let's say at 34. All right. So we have 9 to 3 because they're adding everywhere. This investor is averaging their cost everywhere, not just on the downside. So let's add this up. 3,400 plus 3,100 plus 3,000 equals 9,500 divided by 3. So 3,166, which is 3,166. So 3,166 is the average cost. Now over here, let's add this up. 3,100 plus 3,400 plus 3,000 plus 3,200 plus 3,100 plus 34 plus 3,600 plus 35 plus 34. And then we divide this by 9. Average cost of 33. So we have an average cost of 33 versus 3,166. If the stock was to go to $50, let's say Palantir goes to $50 times 900 shares, 45,000 minus $33 times 100 shares. Oops, hold on. 33 times 900 shares. 15,300 profit. And then if we were to do the same thing over here, 300 times 50 is 15,000 minus 300 times 3,166 is 5,502. 5,502 versus 15,300. Sure, the average cost basis is $1.34 less, but you still made a third of the money. Sure, you put a third of the money in, but you made third of the money in profit. Basically, long story short, averaging your price up a little bit doesn't really have any effect because you have more quantity. So if you have the capital and you can keep investing, you shouldn't be just holding out for the lowest price. It's irrelevant. If Palantir goes to $50, $60, $70, the person that has 900 shares makes more than the person with 300. In fact, the person with 900 shares is going to make more money than the person with 300 shares, even if their average cost was 20, because then they'd still only make $3,000 more dollars, which is $8,000, which is still half. So in order to make 15,000 off of this, you'd have to have an average cost of like $1. Like, I'm serious. That's how bad it is. 300 times $1 is $300, okay? And then the average cost, or the total, has to come off of that. So 50 times 300 is 15,000. So you'd have to get them for free. You see over here, it's 15,300. There is no scenario in which 300 shares beats 900 shares. In fact, even at 600 shares, 600 shares times 50 is 30,000 minus 3,166 times 500. It still doesn't make the same amount of money. It doesn't matter. Like, dollar cost averaging doesn't just mean averaging down. It also means averaging up, just constantly buying the top, the bottom, the middle. You're just consistently adding when the stock's moving so that you have the middle price. That's what dollar cost averaging is. You want the middle price. It doesn't have to be the bottom. You want to try to get as much on the bottom. So when it dips, add 300 shares in the bottom. If it comes up, add 100 on the top. But constantly be adding over time. This way your position is bigger. This is what's important, and I teach this to my students all the time. Ultimately, SoundHound, next to SoFi and Palantir, are the three best stocks right now. NIO is in the mix. I think that NIO is also another great stock. These are great growth stocks. I think that Palantir really is the best. Then behind Palantir, we have SoFi, then SoundHound, and then NIO right after that. Serve Robotics and Enovix. Those are also behind these stocks as well. Really good potential in the market, but my ultimate choice is to invest in Palantir, SoFi, SoundHound, and NIO. These are great stocks. SoundHound is a phenomenal investment, in my opinion. Long term, I believe in the stock. You guys can also use my strategies to dollar cost average and add to your position consistently. I believe there is a run coming with SoundHound very soon in the next couple of weeks during the rate cuts, and a sympathy play to AMD, Taiwan Semi, the other AIs, including NVIDIA. I think it's a solid buy, and you guys should be dollar cost averaging. I will see you on the next video. Thanks so much for being here. Take care of yourselves.